Hi and welcome everybody to today's episode. I'm here with Nguyen, and we've got a lot to cover today. Thankful everyone for being so patient. Today we're talking about the 5 pillars of business rebound. You know where we are, you know what's happening in the economy. We're going to give you some more information around that. And today it's all about small business. So we really want to help everybody out there who runs a small business, has a small business, or even has a side hustle to maximize and try to rebound and get out of this situation we're in with not just get out, but to thrive and succeed out of it. So, Lan, welcome.
Thank you, Phil. And we thank you for. It was a bit. We were trying to finalize a few things to make sure that everyone get the most value today, especially Victorian SMEs who are still in lockdown. But we're looking forward to a ease of restrictions in the next 2 weeks. So let's start. So
yeah.
Okay. So the next. So I'll get everyone to join and just put that you can hear us clear and loud and see us in the comments. So if you are watching live at the moment with us, please let us know that you're here. And today's focus is about helping SMEs rebound. Okay, so a lot of my clients are completely shut down at the moment in during this 6-week period. Some clients can move over and do some minimal work from home, but a lot of people are really suffering, especially those that are unable to move to digital. So therefore, this is a special live Facebook live stream for you that we put together, and hopefully that you can learn something from this and then get ready and prepare for the reopening. All right.
Yeah, it looks like people are on and seeing us and broadcasting well, so we'll make a start. So let's go. So just a quick disclaimer that this is general information. If you really want something specific, then contact us later, but hopefully this is some good education for everybody. Now let's get started. Australian small business. What is an Australian small business? So let's define it first. So the ATO defines Australian small business as any business with a turnaround of under $10 million, and that's most people. So in Australia, small businesses make up 98.45% in terms of sheer numbers of businesses out there. So majority of businesses are small businesses. So you can see there, only a sliver actually make more than $10 million.
Yeah.
Okay, but the Australian Bureau of Statistics defines a small business slightly differently. Now, this one is concerning the employees. So any business that employs 20 employees or less, that's how they define an Australian small business. And that accounts for, again, 98% of all Australian businesses. So you can see how much of the Australian economy is actually made up of small businesses. Okay. And small businesses, in terms of GDP and how much we contribute to our economy, small businesses make up 34% of our GDP. And you can see in here, small businesses, you can have your self-employed or professional, where you work for yourself. That makes up a bulk of the businesses, like 62.1%. They don't have any employees at all. So if you're a professional or a consultant or don't have employees, you're making 62%. While what they call a micro business, 1 to 4 employees, make up about 27%. While if you got 5 to 19 employees, that's 8.5%. So a lot of entrepreneurs out there, a lot of people waving their flag and building their business by themselves. But this is for all small businesses. But what's happening in Australia today in terms of GDP? As we all know, with the virus and with all the lockdown, the economy is actually taking a bit of a hit and has shrunk over this time. So you can see the trend here where the we've been traveling quite well with positive gains every year since the GFC, which was the last time we really had a negative GDP where it actually, our gross domestic product actually shrunk. But you can see here in the last 3 quarters, the GDP is going down, and we're actually in a position where the GDP is actually reducing, meaning or we're not producing or consuming as much, and that's really affecting the bottom lines of all businesses. Okay. So going back to talk a little bit more about employment, because this is really important. What we have here is that Australian small businesses employ in terms of numbers of actual employees is 44.2% of people of the Australian workforce actually work for small businesses. Though we make up in terms of numbers 98% in terms of numbers of businesses, but we employ about 44.2% of employees out there. So most people, almost half the population, works for a small business. And under what's happening in the economy at the moment, it's the small businesses getting hit the hardest, and this is where the employment impact is happening. You know, with medium businesses, they employ only 24%, and large corporations, the ones that are doing the more than $10 million, they are at 31.7%. So you can see there, small business in Australia has a massive impact on the GDP and on the employment. Okay. And this is something really, really interesting. This is what we call a survival rate. So this tracks the businesses that employ with their number of people, and after a 4-year period, if they are still trading or not. So if you can see, the businesses that have no employees have a survival rate. So after 4 years, if they're still trading, about 60% of them are trading still. Okay, so if you got 1 to 4 employees, your survival rate actually goes up to 69.3. And as you can see, the more employees you have, your likelihood of success actually increases, which is really interesting. Which Lan's going to talk about a lot more about that, why she thinks that's the case. But building a team becomes really important, doesn't it, Lan?
Well, this is exactly why we're here, because a lot of people. Let's take a poll now. So what I've come up is the 5 pillars to business rebound. These are the 5 things that I think is simple but very necessary in order for you to prepare, and it can be related to any business, any industry. Now, today we only have time to cover the first 3, which is clarity of your destination. Number 2 is tax and asset protection business structure, and number 3 is the levers of leverage. Bit of a tongue twister there. Levers of leverage. 4 and 5 is also equally important, but I would, obviously this is just an introduction. So if you are wanting the full 5 steps, then get in touch with one of us, and then we can go through a tailored custom business plan for your business to rebound. So let's get to our clarity. This is an interactive webinar. So we ask that everyone on here will participate, because this will help you to have clarity in your destination. I would like everyone to, if you're a business owner, decide how much you want to earn the next 12 months. So just write off this year because obviously it's lockdown, but let's go from the next financial year. Let's say, 2021. How much do you want to earn as gross turnover and by what date? Okay. You can, if you're comfortable to share in the chat, then do so. Then if not, just write it down on a piece of paper now. I will show you an exercise that we use for our clients that is very effective. Okay, so decide how much by what date. So because this will determine the success of your business. Okay, so if you've got it and you want to share, please put in the comment, and I might pick someone in the hot seat to help them as well, the brave ones.
Yeah, so every business is going to be different. Every situation is going to be different. So this is just to have clarity on where you want to go. So, you know.
Okay, so of course this is directed to the CEO and the director. Okay, so now, can everyone once they're finished, let us know that you've thought through this, because if you don't have the answer for this, then the next section won't work. So I like some comments, please. and it doesn't have to be. It could be a made-up figure. It could be a desired figure. It doesn't mean that you're like, if you're on 100K and you want $1 million, it doesn't matter, because as long as you visualize it, that's a starting step.
Yep. Or let us know. You don't want to put a figure, just let us know that you're done, and we'll keep on going to the next session.
Okay, so for the company or individual, either way. Yep. Thank you, Koi. Brave soul. Good. For your business, yeah? Okay, great. So it looks like everyone else has just written down on the piece of paper. The first step to achieving your success is actually have clarity of how much you want. A lot of people say, I want to be rich, but what does that rich number look like to you? Okay, if you can't say that number, or you don't know that number, you're not going to get it. That's really the secret of success. Okay, so I'm assuming everyone else has the number and at what date. Now, next slide, please, Phil. Okay, that's not the one. Go to the one with the value calculation.
Okay.
Company turnover 1 million in 6 months. Very good. Okay, so where you put the company turnover, then you put desired income. We're going to do a quick maths calculation. So let's say we take the 1 million per. Yep. Now, so for the second one, 1 million in 6 months, let's make it 2 million in 12 months. So it's easier. So 2 million divided by chargeable hours. Okay, so we've got an example at the bottom. So in your case, put the 1 million divided by 2,000 hours. That is your value per hour. Okay, so let everyone work out your value per hour for me. This one you can put in the chat. Okay, because no one will know your other denominators. So if you want to earn 500,000, and we've worked out that there are 2,000 hours in a year, working hours, then your rate should be $250 per hour. Please put it in now. Phil, we'll probably, so we've got 15 people watching. So this will lead to the next step, okay? Because once you know your value, then you'll know what kind of new work or work that you would take on and your pricing. It's very important.
Okay, and also have to think about, in terms of your business and how you run it, how much hours it is for you, because depending on your role and what you do, some people are doing, the full 40-hour week, or you might be on 50, 60 hours, or you might be one of the ones who are doing a management role, and your billable hours of what you're actually doing is actually quite little. Let's say it's only half your time. So instead of being on the typical 40-hour week, you might be only doing billable hours of 20 hours. So you really got to think about your billable hours to your client is what we're referring to.
Yeah. So we've got two answers. One is 1K and one is 300. Okay, great. The 1K, is that the real estate and finance in development? Okay. Now this is very interesting because you can see, I mean, out of the two people, I'd like more people to answer, because this is, before I crack the secret, I would like, the 18 people on here to put down their comment. Otherwise, if you don't take part, then you're not going to achieve your success. Yeah. And we all want every business owner to rebound, not just two. So more answers. Thank you, Wing. Great. But it's amazing how three different people have different perception of their value, isn't it, Phil? That is amazing.
Absolutely.
We're all human beings. We're all business owners. Why do and there's no right or wrong answer as well.
Yeah.
Okay, so
it's depending on the role you're playing in your business and type of business you're running yourself. So it's all very different. So we got lots of answers coming through now. Thank you, guys. This is awesome.
Yeah. So that's right. And the thing is, as I said, a lot of small business earn very little. Like, I think you had a slide. We had a discussion, a slide. If you can bring that up.
On there, then we'll cover that as well. Now, one of the questions is, it's 50 weeks. So this is it. Going back to the way you've structured your business and what you've committed to your business in terms of time, is 50 weeks realistic? Some people work 52 and don't take anything off. So look historically on what you've done. If your average week per year is 45, 48, we use 50 as a benchmark, as most people do take a couple of weeks off a year to do, and especially there's holidays and things like that, where there are not billable time. So take that into the account so that you can get an as accurate figure as you can. Yep.
And remember, you're designing your own life. So if you feel that you can achieve what your gross desired income in 45 weeks, then that value rate is higher. This is just an example, guys. No one is making you work 50. I mean, unless you're an employee, but even high execs. So if you can achieve more value, let's say instead of let's go to Koi's one. I just pick on him, 300 per hour. But if you can achieve in 45 at $500 per hour, you might be able to take, the 7 weeks off instead of 2 weeks off. You design your own life. No one does. And I encourage my team as well, what do you want to get paid? Because whatever you want to get paid, make sure you produce that value. Even though they're still employees, but that's the mindset that I encourage my team. For small business, you have more room for growth, which means that if you want to make $2 million or $1 million in 6 months, increase your value. Does that make sense? Yeah. Okay. So
on designing your life, you are in a small business, and most of the people listening to this are actually the business owners. So you can design your business as well. So it's your life and your business.
Yeah. Okay, so once everyone is saying 150 minimum, I think, or 100 minimum. Okay, so I'm going to hold you to that. Okay, and for those who said 1,000, I'm going to hold you to that too. And the next slide, if you want to achieve this value, you're going to approach your life differently. Okay, so thank you, Phil. The next slide is how do we achieve this? Obviously, everyone has equal value of time. We all got 24 hours of life. I don't have more. Phil doesn't have more than you guys. And definitely what's the entrepreneur, Richard Branson, who has 400 companies, doesn't have more than 24 hours. So the solution to achieving that value is the art of delegation. People who don't delegate well have these ones. So these are the don'ts. A perfectionist attitude, because you can't achieve your value if you have this attitude, right? The not able to let go of control. So small business, including bigger business, for those who don't, let's give an example. For those who don't willing to hire staff because they want everything perfect, they're the ones that cannot delegate, and they're the micro business. Micromanaging your staff, okay? So that's not good either, because you waste so much time overseeing this, looking after their shoulders and seeing what they're doing, if it's the right thing or not. I don't have time to delegate. Wow, I've heard this before. Okay, accountability. Now, lack of trust. Okay, please put in the chat if you're guilty of which one. I have been guilty before. At the start of my business was that it was easier for me to do everything because I could get it done faster and right the first time. I don't have time to delegate, but the solution for that is just having good systems, and so that whatever your perfectionist image of that task, make sure you record it in a video and have that your team copy it. And the saying goes, good enough is good enough, isn't it?
That's right. There's an expectation out there that if you can get someone to do 80% of a job that as good as you can, that's good enough. Okay. But because all you're really doing is sacrificing 20% of performance and getting all your time back and all your freedom back to do the high value stuff. So
that's great. Yeah, that's right. So this is not only for a small business, but even managers, in high execs, where they work long hours. Remember, you're designing your life. If you feel that you have to do everything, you're going to be working very hard. If you stick to what you're good at and your skill. So, for example, if you're a small business, please don't do every task. Remember your value rate. If your value rate is $1,000, certainly you're not going to do bookkeeping, and certainly you're not going to do hiring staffs. Things that are less value than the $1,000 or less value than the rate that you want to achieve. Okay. I know a lot of small business, they try to do everything to save money, especially startups, but what that does to you is that you're going to, anything that you do less than your value rate will reduce your passion for why you started the business in the first place. Okay. And by the way, and I'm going to talk about leverage in later on. So we'll keep that as save for later. Now, what is the proper way to delegate? Let's have a look. Thank you, Phil. So first, decide what you'd like to delegate. So list out all the tasks that is a disruption in your life. So check emails, pick up phone calls, anything, answer to the junior staff, answer to admin task, and decide who you'd like to delegate these jobs to, because those are the people that need to be exposed to your system. Start the process of delegation and finally reduce the support and take the back seat. So, for example, all of my team has a specific role. Okay, so if, for example, in yesterday's meeting, when one of my team members asked me to do an admin task, and I said, I have to draw the line here. I'm not going to do this admin task. And I encourage my team to resolve it herself. Because at the end of the day, if you don't take a stance and protect your time, people will steal your time from you. They don't do it on purpose. But if you say yes to everything, then you are ineffectively letting people steal your time. And that makes you less effective as a business owner. Agree? So therefore, be careful of what you say yes to and learn the art of proper delegation. Of course, to avoid, when you delegate a task, and if that person, your junior or your staff member is not doing it properly, look at the way you delegate. So have you given them a training to do the work properly? And if you're finding that you're continuously training the new staff to do the same task, that means it's your responsibility to create the system. So, for example, even the simplest task could be, how to make a tea for a client, or how to, prospect if you're in real estate. Make it a video of how you would do it and then have that employee train and watch it time over and time over again. Any $1 million business plus the leader and the managers need to learn the proper art of delegation. And if you're not there yet, it's probably because there are some gaps in the way you delegate. Yeah. Any other comments?
And what we spoke about the other day was really good in terms of the value that each person in the organization brings. It might not be as obvious. For example, if you got a small chiropractor type setup, let's say, and you're looking at the receptionist, and you're looking at that as oh no, I've got to pay someone, let's say $50,000 a year to be receptionist. You're seeing that as a cost. But is it really a cost? A really good receptionist, okay, can bring and keep your customers. But more importantly, a really good receptionist allows you to do your high value $250, $300 per hour work while everything else is taken care of. Okay, so they're bringing real value to the business. So they're not a cost. If you see them as just a cost, then you're going about it the wrong way.
That's right. And so it's an investment if you know how to identify their value. So that their role, they have a value rate as well. It could be less than yours, like it could be $50 or $100. Make sure the task that you allocate to them equates to that value. Whereas if your value is $1,000, there's no way you're going to pick up the phone, right? And if you or do an invoice, because that's not going to generate you $1,000 an hour, are you? So for them to be part of your business, they are giving you more time. So instead of taking 1 hour of your time to answer those admin calls or calls, which is very important, calls to your client, farming, instill value, but you still have 8 hours of your time to do the marketing or the rainmaker of your business, which is not many people can do. Okay, so that's the pillar one. So the pillar one, we clarify the destination, how to know your value, and based on the time frame, and we give you some tips on delegation, the do's and the don'ts, and we're going to go to pillar number 2 now. So pillar number 2 is all about minimizing tax and asset protection. A lot of my clients have this already because I harp on it. If you want to join as our client, you got to have proper asset protection and proper, minimize tax strategy. So have a look at the next slide for me. And you might be familiar with this one. Thanks, Phil. Next slide. So this is my famous tax saving asset protection Tic Tac Toe, which I call it. Basically, it's similar to the game Tic Tac Toe, but for those who are still a sole trader, which we do define as someone that is, trading their business under their name still, then you are really disadvantaged, okay? Because as you can see, following this chart or this game board, sole trader pays, how much tax does it pay? Up to 47%, okay? Compared to your peers, if they're trading as a company, only 26, and in a trust, when I say none, it means up to 0% if you can have the proper tax strategy. Now, the most important, given the COVID at the moment, is asset protection, which is the last one. Sole traders trading under your name has no asset protection. So if your business in some kind of distress and you're looking down, like given due to the lockdown and that, and you own your business in your own name plus your own house, then you're just exposing your assets, your home to the creditors. You're like a beach whale, I say. So I hope, if you're guilty, if you're one of the sole traders, I won't get you to put in the chat, but please come and have a chat with my team afterwards, because there is something we can help you with straight away. For those who are in the company in a trust, that's great. First step is done. You got asset protection. However, given the COVID and the JobKeeper and grants that are given to small biz, make sure your strategy is elite, meaning that you're minimizing tax. Because I was just talking to Phil, you know, all the government stimulus, actually that is taxable. So while you're getting free money, let's say you're getting, you know, 250 to 200,000 from JobKeeper. You know what? If you're in a company, nearly a third of that is tax. So make sure you set aside some tax afterwards, even though your business might be broke. The same with a trust. So there are different strategies where we can help you to make sure that your business flows through your investments, and so that you don't pay much tax at all legally. Okay. So any questions with that? So the next slide, it needs to be addressed as well, which is side hustles. A lot of people now, because you're in lockdown, have created side hustles. Okay. So side hustles mean that you could be working as an employee or doing small business, but you're also doing Uber driving, network marketing, coaching, online sales, you know, all those consultancy, even property development if you operate it in a business like fashion, and cryptocurrency. Yeah, so please put in the chat which if you are doing a side hustle, and which one are you doing at the moment, because I think this needs to be addressed, and yeah.
That's right. We should be applying the same rules. Just because it's a side hustle, I think people forget that it's still a business, and the same rules apply. Plus, if you are in your normal day job, you're employed and you're doing reasonably well. Let's say you're over that $100,000 mark, and then you do have a side hustle, and that generates income, and it's all in your own name. That becomes income that's applied to your full personal tax rates. And as in the Tic Tac Toe graph there, you could see that is at the maximum tax rate. So you're at 47%. So even side hustle, you should be able to structure it cleverly, legally, and to protect your assets and to minimize that tax. So if you are doing it, or you've just started or thinking of starting it, let's do it right. Let's make sure that you're saving the tax and protecting your assets from day one.
So please, let us know what side hustle you're doing. A lot of my clients are doing online sales, eBay, because it's a good time to get rid of their items that they don't need and generate cash flow. What other things? Cryptocurrency share trading is another one. Is quite good. Is quite popular. The reason why, and any others, please put in the chat what you're doing so that we can address it. If we find that more people are doing, let's say, network marketing, we will specifically address that.
So what we found was, when we did the research around this, is that the average Australian business is actually earning quite a low number, and that's around about under $25,000 Australian, and that's about 52% of these businesses are bringing in that around about that figure. And we believe a large number of that is that because people are treating it as a side hustle, not their main source of income. But even if you are, what we're saying is, let's structure it right, let's set it up right, and make sure you're not getting charged the maximum tax rate.
Okay, so, and the other important thing is, if you're doing a side hustle, say property development, and I've seen it, actually came across a client that was husband and wife were working professional IT and teacher, actually. So they were pretty high incomes already. They were on the 37 tax rate, and they were doing property development in their own names. So now they come to me after 6 properties, and they said, look, can we restructure it? Can we restructure our assets or our properties into a trust? Now, the best time to get advice is before you sign the contract, before you actually start the venture, because the problems they face now is that they have no asset protection, which is because it's all in their own name, and they're engaging builders and subcontractors, which is increased the risk by tenfold. Secondly, they are already on high income and they want to sell 2 properties, and the capital gain is going to be all lumped in their names. So therefore, what that means is they're going to expect to pay, the top rate of tax, which is 47%. Half of it of the profit will be paid potentially under their names. So they're in a pickle at the moment. And if they do transfer now to a trust or a company, the stamp duty and capital gains will arise. So as you can see, for proactive, seeking advice will save, hundreds of thousands of dollars. Sometimes it cannot be restructured, apart from costing money. So therefore, if you are doing a side hustle at the moment, please be aware that there are better ways to protect your assets that you currently have, and also to minimize your tax. You don't have to always have it in a sole trader, okay? And you shouldn't actually.
Okay.
All right.
So let's talk about your levers of leverage and what people can actually do.
All right.
So,
I was just going to say, levers of leverage is my favorite. This is the one that more sophisticated. So once most people start their business as their sole trader, okay, so they start with their own time, their own own skill, and their own, I guess, 24 hours a day, and themselves. There's no other people, okay. But so therefore they cap themselves at normally 100K turnover. Okay, because first everyone only has 8 hours of work or 24 hours a day in time. People is themselves. So if you're, so your health, or if you're healthy, you can work longer hours. But if you're not, and if you're, then so you can't. And skills, whatever skills you have, believe me, if I see a doctor or a lawyer trying to do marketing, well, that's why they're not doing so well, because you might be really good at, doing your profession, but you're not so good at doing other things. And if you try to learn now, then it's going to take much, much longer. So these are the 3 things. Now, I want to get everyone's opinion on which one do you think that you need, that you're leveraging. Put in the chat right now so that we know. So time, people, and skills. And then we'll go through each one and which one is most, how to accomplish that. So I'll give you another 10 seconds to do that. And then we will reveal how you can improve on that. Now, leverage is so important to scale, right? And a lot of sole traders don't do that, and therefore they put a ceiling on their turnover or their sales.
and really, it's the only way to grow and scale from a sole trader to small business to medium to large. It's all about leverage. If you're not leveraging, then you've got no way to be able to do more as a company, as an organization, achieve more, reach more people, serve more people. You can, like Lan says, you can only do so much by yourself. And the more people that you're trying to reach, touch, and service, you need a team behind that to actually make it happen.
That's right. Yeah. So let's have a look at the next one, the next slide. Thank you. So Koi is saying time. Thank you, Koi, for commenting. Anyone else? If everyone else fully leveraged properly?
I don't think there is such a thing as fully leveraged. You know, you can keep on leveraging until, you know, you consume everything.
Yeah. You know, when I started my business, I was working 7 days a week. This was back in my 20s when I could work, you know, more hours and less sleep. Yeah, 7 days a week, you know, doing tax returns on Sunday as well. Pretty much I let my business run me. Yeah, not I run the business. And therefore, but you know, now after 15 years of business, your health and family and the life that you can't do that. You can't do that because that's not a life that I want to build for my family, right? You create the business to so and your life to that you want. Okay, so therefore it's up to you. If you the type of life you want, you have to leverage time. Okay, so let's have a look at it now. I'll get Phil to go through this one. This is a good pie chart of the time that people use during the day.
Okay, so a typical person, you know, works about 35% of the time. They're sleeping about 30% of the time. But it's all those bits in between that really becomes really important, where you got family, eating, sleeping, friends, others, or your hobbies. Now, if your pie chart has only got work and sleep in it, then you don't really have a balanced life. Now, but what you're doing, how leverage works is that section where it says work, instead of making it all you're getting other people's pie chart and putting that work section on them. So you got multiple pie charts out there with sections of work, and that work becomes work that's for your business to achieve the things that you want. Okay, and you're helping them, you're paying them a wage so that they can have their own pie chart, creating a life that they want.
That's right.
Okay. So it's a synergy, it's a win-win. But the more people that can come in, is the more slivers of time where your work time can get split up and given away to someone else. Then you can then schedule in all those things that are important to you, that makes your business service the life you want, so that it creates the lifestyle that you want. And then you love your business because you are able to create that lifestyle that you truly want with your family, do the things you want, and not just working.
Yes. So Phil, you know the number one secret about leveraging time. So everyone has 35% of that pie chart to work. I mean, you wouldn't it's not healthy to work, you know, for a long time, more than 35%. But if you think about it, for someone who's not willing to employ staff or a team, then they only have 8 to 10 hours of work. But if you employ a good team, then you have 8 to 10 hours times the number of employees you have. Okay, so think about it for a minute. So in a day, if you have 10 staff, then you have 80 hours instead of 8 hours. So one person had 8 hours to generate revenue. Another person has 80 hours to generate. Who's going to win? And it's not about even.
I'll back if that was a if that was a race.
So that is something. That is something you need to get clear about. You know, hiring your next employee. Is this person going to give me an extra 35% of, you know, their life? Obviously, you compensate for them for it, not handsomely, but not everyone is born to be entrepreneur. Entrepreneurs do work 3 times harder on average, but we are passionate beasts. Like we love what we do, so we would work, you know, nighttime, 4 a.m. Not many employees would do that. So, however, but if you can give them a system and a role to do that work, the work that you probably shouldn't be doing, then they could assist you to grow your business. And that is about leveraging time, other people's time, to help you build your and scale your business. That is so important. Now, the question that I always get is, when am I ready to hire the first staff or the next staff? Well, anyone have answers to that? You have a business. When do you decide to hire your next staff, Phil, in your restaurant?
No, before we started, we created a plan of how the business would look, and it wasn't just me. Yeah, we had roles in there that we wanted to fulfill, and we were clear that even though we were going to work the business, we planned a 6-month window that by the time that 6 month came up, we would be out of it in terms of active day-to-day running. And so when you do that, you come into the business with a different mindset, and you come out with a clear mindset, because when you're in there, you're looking at all the tasks and all the roles that need to be done. And if I can fill all these, that means that, including the roles and tasks that I'm doing, that means that if it's filled, I no longer need to be there. And now it's a purely management role. We're overseeing the business as a business owner, rather than being in the business. And you've heard it before, time and time again, where for businesses, you need to spend time working on the business, not in the business. And that's where the time comes in.
And that's a great point. And to answer the question about profitability, because a lot of small business fear that, if I hire this person, 50K reception or 50K accountant or whatever, or 100K, then they're going to take or reduce my profit. That's a big fear from a lot of small business, or any business. So your job as the rainmaker, the leader, you need to make sure that you need to assess their value of time, like how we discussed in the earlier slides. So let's take a reception. If her pays 50K and you assess that you want to at least cover 2 or 3 times of her pay, then make sure her rate, work out her value rate. And if her value rate is, let's say, $100, then you should more than cover the salary that that you pay her. So it's really your responsibility to know how to assess the value rate and give her the task that she will add value to your business. Okay. So some of the tasks that we discussed before was, to convert, to answer the phones, to convert, and look after the clients, be proactive, and train them, so that, because them doing the task that you don't do is also adding time to you as well, so that you can do the task that you're charging $300 or $1,000, as one of the comments was saying. So that is the strategy. The next one we're going to talk about is people. So we know that to create more time, we actually have to let go of the time wasters and hire people. Now, in this step, hiring the right people and the right team is very important. And also, to keep that team the right mindset is up to you with the systems. Okay, a lot of people they do the interview, but then it stops there. So you pick the right people, and then you put them in a position, but you don't really train them properly. You expect them to know what you're thinking and expect them to do the right thing, how you would do things, without really training them. Maybe training them a few days at the start, but then that's it. You're on your own. Now, even my husband doesn't know what I'm thinking, and we've been together for a long time. So the way to let your team member know how you want things done is definitely create a system and say, this is how I want. If I was you, this is how I would do it. Yeah. So that's about leveraging people. And we already touched on how you can, leverage people by making sure that you set metrics and KPIs, so that they are doing their value rate, instead of just simply filling roles and being there. Because if they're not adding value to your organization, then maybe it's not a good time. They're not the right person to be there.
Do you recommend any formula or anything that you've used in your business to in terms of KPIs, in terms of targets, in terms of things to relating back to the success of your business?
Yep. There's two formulas I quite like. It's quite simple. The first one is the profit first formula, which is, and you might want to type it in the chat, Phil, so people know. And it's, what is it? Sales minus profit equals expenses. Why I like that is the old formula for profit or profit and loss, as an accountant, we know is sales minus expenses equals profit. So that's the old formula. The profit first formula, and I'm quoting from them, is sales minus profit equals expenses. So as today we ask you the question, what revenue or profit you want first. So let's say if you want a profit of, so type in sales minus profit equals expenses. Yep. So let's say you want a profit of $300,000, okay? And your expenses of your wages and your staff is, let's say $400,000. So what is the sales that you need to generate to achieve that profit of $300,000? I'm going to ask to the chat. If people are still there, let's see if you can work it out. If I want a profit of $300,000 a year and I have wages and expenses of $400,000, what sales do I need to generate? See if people are still following and listening. And give for the first person that can answer. This is too easy for an accountant, though.
But it's throwing the whole general accounting practice theory or the way they do things on its head completely. This is not what we were taught when we go to accounting school, or not what you're taught in uni and things like that.
Okay. To be fair, can you put in the question in the chat as well, Phil, so that for those who missed out? So we have we want profit of $300,000 a year, and we have expenses of $400,000. What is the sale gross that we need? So if you look at your business this way, okay, so two people have answered, and both correct. Koi, you're my accountant, so so yes. And it's actually quite simple. If you have that mindset, what it does is that instead of if you know that you want 300, and you either gonna move the lever of sales or expenses to get that profit, isn't it? Now during this lockdown, it's quite hard to, if we're in a lockdown place at the moment, like economy where it's restricted, then you would move your expenses because there's not much sales you can generate extra. But if we're in a booming economy like the last 12-18 months before, then you would move expenses as well as sales to generate the profit. Thank you, Koi. Accountant mind, GST plus GST. Yes. So therefore, what I'm saying is I like this formula because we start with the bottom line first, the profit, what you want in profit, and then you can work backwards for sales. This is very important because a lot of people focus on just the sale value. Like, okay, I'm making $1 million, but what is your profit? Has your profit gone down because you hired too many staff to generate that $1 million? That is why it is important to keep track of the bottom line first, what you want in the bottom line first, and then work backwards. Okay, that's the first formula I like. The second formula I like about making sure people are productive in your organization is that what we also implement in some of our clients, especially for service business, is that if you have wages of say 300,000, or then make sure that the wages cover your business at least 3 times. Now, so let's say we have wages expense of 300,000. So have a look at your business now. Everyone have a look at how much is the wages that you that you can do it simply now. If you put down how many wages expense do you have in your business, Phil, I'll get you to do it too. And this could be the total wages, okay? And then if you are generating 3 times, this is the rule of thumb. If you generate 3 times of your sales, what would that need to be? So if it's 300, the 3 times, what would that need to be? Can we put the question in the chat box so that people can answer? This is the important concept of profit first, but I call it profit boost. And this is a concept that a rule of thumb. And if you're not doing this at least, then I don't think it's sustainable. Okay, so in this kind of environment, if your wages is like let's say 200, let's go back to the example. So expenses 400. Let's say your wages is 300,000. What is the turnover that you should be generating in your business? And I'll explain to you why you need the 3 times. The 3 times is one is because you have to pay for the wages. Okay, so that's common sense. 2, you have to pay for the taxes as well. The taxes, remember, it's up to 26%. And 3 is your share of the profit as a business owner for working so hard. Okay, now that's the minimum I would suggest. If it's less than 3 times, your business you're working way too hard and it's not sustainable. I've seen a lot of business owners that generate definitely all the time less than 3 times, and then that's where we look at that's where I do consulting and help them shift the ratios. Okay.
Yes. And we've been there. And Lan, you've helped us through that process, and I've got to thank you for that. When we first, like you said, mentioned before, when we opened our restaurant, our revenue was actually quite high. It was a really big buzz around the restaurant. We were bringing in about $60,000 per month at that time. But what we didn't understand was our costs and the number one thing was our wages. And that made a big difference. Like, we're 4 years into the business now. Our revenue actually dropped over the last few years, and in this year that it's come back up to the same $60,000 per month in that business. However, at the same revenue, because we've restructured, because we looked at our processes, look at our staff, now we're running a much leaner business. So the same $60,000 business, we are doing the 3-to-1 ratio now, more than that actually, which is fantastic, and we weren't there before. So we're able to draw a profit, we're able to run the business and able to pay staff and taxes. And it wasn't easy, and it was a change of mindset, and it was having to implement all the processes and all the systems and getting the support on the back end of how to make that all happen. And it's been a great experience.
Yeah, so we did that 2 years ago, before COVID, I think, like 2 years ago. Yeah, 1 or 2 years ago. And, thanks for sharing that, because, I mean, that's the kind of things that every business should be doing right now, because regardless of what your sales turnover, you can improve your profit. That's what I'm trying to say, because Phil was just sharing that he generates the same sales, but he's making, the restaurant business is making more profit. And if in the case of right now where it's quite hard to get more sales, then work on the numbers of your business, which is the ratio. Okay. And I hope people got something out of that, because you know what, in my one-on-one private consulting clients, who pay me a lot of money to get their businesses coached and restructured, this is exactly some of the tools that I share with them that can turn around a business from negative to positive in a matter of 3 to 6 months. if they follow strictly what and it can be done. It's not hard. It's not hard, but the mindset needs to change. Not just the leader, but also the team mindset. Okay, great. So we go to the third one, and which is leveraging knowledge, leveraging skills, experience, and education. So this is a very now we're getting advanced stuff now. So as the leader, as you cannot be good at everything. I've met a lot of directors and a lot of very talented business owners, but you know what? And if they normally stick, the ones that do really well, who build multi-million-dollar businesses, tend to stick with what they're good at, which is the niche. So if you're good at sales, then stick with sales. If you're good at, dealing with customers face to face, stick with that. If you're, and learn to leverage skills. What does that mean? So if let's say you're a chiropractor and you're good at, obviously treating patients, you're not going to be good at property development or accounting. Okay. You might be smart enough to be able to learn and read about it, but how long will it take for you to be to learn the 20 years of knowledge from another chartered accountant? While you're doing the learning, you're again attaching away from your value proposition that you can't generate income from what your skills. So leverage skills is very important. In our team also, we discuss, I have a manager in my team and, some seniors, there are certain skills that they're good at and some certain different experience they're good at. And, they're happy to do that, but they're certainly not good at everything else. Okay. So we complement each other's skill. So once you identify what you're good at, and I think Jack Ma say it very well, after 40 years old, if you need to know what you're good at, if you don't know by then, it's kind of a bit late. So once you know what you're good at, you make sure you stick to that and hire the lack of the gap. So hire the experience and the skills that you're not good at. Okay. So that way that you all have top skill and top experience in your company. So that's.
I think in the experience is such a key there. Like as a business owner, what we're trying to do is not make mistakes in our business, because mistakes are detrimental. And if we're don't have the education and don't have the skill, or we don't have the experience in that area, how many mistakes are you going to make? And your business is going to suffer again and again until you upskill yourself and get the experience that you need. Leverage. This is all about leverage. Leverage of someone who has had 20 years of experience in that industry, made all the mistakes so that you don't have to. That's the key. You leverage their mistakes and their skills, their education, so they can see what you can't see in your business in those areas that they're the expert at.
That's right.
And, yeah, it's. I just want to emphasize that it's just so critical. So even when you starting a new business and you want to get it started in the right way, who are you trying to attract? The complete newbies or people who already experience in those areas? Yeah. So the answer there should be pretty simple. You want the experienced people. You want the proven people, proven results. That's where you go to. That's where I would go to every time.
Yeah. And I think at the start, when you're trying to, save money, because obviously your business is still new, a lot of businesses tend to make the newbie mistake, which or the newly established mistake is that you're trying to save money. So therefore, I'm going to learn marketing. I'm going to learn social media marketing. We all done it. And I'll try to do my own books on Excel because, I can save a bit of money there. But you know what? That time that you spend, or that time that you pull your hair out trying to balance your books, you could be thinking about how to write a business plan to Rebound, how to generate the $1 million sale. You might save what, $150, 3 hours of bookkeeping, but really you're losing $500,000 in sales. So think of that. Think about that very carefully, because that is a common mistake for sole traders, smaller business, micro businesses. But the larger business, they don't do that, because they're thinking now of what is the next 10-year goal? What's the next 10-year plan for my business to grow from 1 million to 10 million? They don't have time for the small stuff. Okay, so that is I think that's the 3 pillars and ends it there. So I hope that, so what's the next step? Any questions for me or Phil about what we covered today? I might get you to go to the next screen. And please put in the comment now. I know that we've covered a lot of content. So remember, there are 5 pillars, but I did say we're going to cover 3 today. But what I'm offering for the viewers today is for the first 10 people. If you book a strategy session for your business Rebound, and there's a link there, and I might get Phil to put in the chat as well, that link. Then we will give you a strategy session, complimentary, to assess how you're gonna rebound your business post this easing of restriction. And we will cover some of the 5 pillars and help you build a robust plan so you can thrive. Okay, because this is the best time. Everyone is in lockdown, so if you should have more time on your side, and this is a great time to build that plan. Okay, so if you have any questions, please put in the comments about any of the things that we covered today, and we will surely answer them. And and I'll get Phil to share who's our special guest next week.
Yeah, I'm very excited to share with everybody on that one. Okay, so we've been doing a lot of these sessions trying to help everybody, and one of the things that's come up again and again in our talks is about gold and about investments. So next week, let's get it on. We have Jordan Alicio from the Perth Mint. He is the manager of the listed products. He will be joining us on the show, talking about why, giving his insight into the economy and why he believes gold is a great investment in the meantime and moving forward, and plus how do you get started and with all the products that's available on the market, and what separates Perth Mint to a regular bullion dealer. And so that's very, very interesting. And he'll also be talking about a little bit about self-managed super funds, and with how gold can be purchased and be a part of your portfolio in that as well. So that's really, really great. So that's happening next Tuesday at 2:00. So if that's something that you've been looking at or something that you want to know more about, certainly join us next week with Jordan. So
Yeah, and if you have any prior questions for Jordan, please send it to us and we will have it answered on the day. So
that's right. That'll be really good. During this week, I've got a bunch of questions for Jordan that I've already sent him, so he's looking into those. But please do message us or contact us with questions, anything specific about anything about gold investments, about the industry and how to get started, or anything like that, anything specific you want to know. So just so that we want to make it as valuable to you as possible. So make sure you get your questions in so that we can answer them specifically.
Okay. Well, thank you everyone for your time today. We've gone the full hour and a bit, but I hope that everyone's more confident and knowing, starting their business rebound plan if they haven't already, or reviewing it. And if you need help, please reach out. Okay, Phil and me and my team at Success Accounting Group, that's what we're here for. We're very passionate and want to make sure that 98% of SMEs survive and thrive, because that makes up the majority of our economy. So if you're one of those people, get in touch if you need a helping hand. Okay, thank you guys. I'll see you next week. Phil and Jordan, and I look forward to our discussion.
Thank you so much, everybody. Thank you again, Lan. Your expertise is always welcomed.
Okay, thanks.
Fantastic.
Bye.
Thank you, everybody. Goodbye.